We're tackling a really crucial topic today, something absolutely central to how the country functions.
That's right. We're getting into public administration financing. It's basically the engine room.
Exactly. Without understanding how money flows in and out of government, how it's controlled, well, nothing really works, does it?
Not effectively, no. So today, we're zeroing in on Module 3, financing. This is straight from the N5 public administration curriculum.
Perfect for students studying this right now, but also, really valuable for anyone already working in public service here in South Africa.
Definitely. We'll look at the foundation, the basic theories, the budget cycle,
Mm.
which is key, who the main players are, where the money comes from, and importantly, the rules for controlling it all.
And if this sounds like your kind of thing, if you want to explore these topics more with us, well, hitting subscribe is probably a good idea.
Definitely. Yeah. Click that subscribe button. We've got plenty more planned.
And maybe give this video a like. It helps other people who are interested in this stuff find the channel.
Please do. It makes a difference.
Okay, let's unpack this. We need a starting point, a legal anchor. Where does the law actually tell us how public money should be managed?
Well, the big one, the absolute cornerstone, is the Public Finance Management Act. That's Act 1 of 1999, the PFMA. You really can't talk about public finance without it. It sets all the guidelines, the rules for management, accountability, reporting, everything. It was a really important step post-94.
Okay, so the PFMA lays down the law. At its core, state finance is about what?
Pretty simple, really. It boiled down to income received, we call that revenue and expenses. What comes in versus what goes out.
Like a household budget, just
Yeah.
bigger. A lot bigger.
Precisely. And the main ways the state gets that income, that revenue, are things like taxes, that's the big one, obviously, but also tariffs, levies, various fees for services, and sometimes loans.
But government plans aren't always perfect, are they? Sometimes spending goes over the income. What happens then? That's the deficit, right?
Exactly. A deficit is when expenses exceed revenue. And there are mechanisms for that. If
Yeah.
there's a temporary shortfall, maybe tax receipts are slow coming in, the state can actually request an overdraft facility from the Reserve Bank.
Okay, so it's not like the whole system just stops if there's a cash flow issue.
No. It's about ensuring continuity.
Hmm.
Essential services can't just grind to a halt because of timing mismatches between income and spending needs.
Right. Let's shift gears slightly from the mechanics to the philosophy behind it all, the general financial theories. There's a core belief here, isn't there?
Oh, absolutely. And it's fundamental. The guiding principle is that government funds are public funds. It's taxpayer money.
It belongs to the people.
Exactly. And because of that, it must be used only for delivering services and for the benefit of the country, not for personal gain or political agendas. That's the ethical bedrock.
And that principle directly shapes how things are structured, doesn't it? Like who's responsible within departments.
It does. Usually the minister, who's the political head of a department.
And that title, accounting officer, carries a lot of weight.
Huge weight. They are personally responsible for the financial management of that department. If things go wrong, if funds are misused, the buck often stops with them. It reinforces that seriousness.
And the state budget itself. That document is more than just numbers.
It's the official plan. It determines what activities the government is actually authorized to carry out. It needs government, specifically parliament's, approval to become active.
And this all happens within a specific time frame, the financial year.
Yes, a fixed period. In South Africa, that runs from April 1st to March 31st. That's the cycle for budgeting and reporting.
But it's not just thinking year to year, is it? I saw mention of it being a 3-year rolling budget. What does that mean in practice?
That's a really important point. It means planning isn't just short-term. It's strategic. That rolling 3-year view allows departments to plan bigger projects, things like infrastructure, knowing that funding for the next couple of years is provisionally mapped out.
So it provides some stability for longer-term goals.
Exactly. Stability and vision, even though the formal approval happens annually.
Okay, that makes sense. So this planning feeds into a clear process, the phases of state finances. There's a standard cycle.
Yes, a very clear 4-step life cycle. You've got the preparation phase, then the approval phase, followed by the execution implementation phase, and finally, the absolutely critical control phase.
Let's pause on preparation. I know students often need clarity here. There are 2 kinds of budgets prepared, the program budget and the itemized budget. What's the difference?
Good question. Think of it like this. The program budget is about the what and why. It outlines the department's goals, its objectives, say, improve literacy rates, It's results-focused.
Okay. And the itemize.
The itemized budget is the how. It's the detailed shopping list needed to achieve that goal. So X number of textbooks, Y number of teacher training workshops, Z number of new library computers. One is the mission, the other is the nuts and bolts.
That clarifies it nicely. So once it's prepared, approved, executed, what does the final budget document really do? It's more than just accounting, right?
Well, much more. It plays four key roles. First, it's a policy document. It clearly states the government's priorities and direction.
Makes sense.
Second, it's a working program. It's the actual plan of action for public servants. Third, and this is crucial because it's public money, it has to be a source of information. It must be published. Transparency.
Right. Transparency is key.
And that leads to the fourth role. It's an instrument of control. Because it authorizes spending for specific things, it also restricts spending to only those things. It keeps spending aligned with the approved plan.
Okay, so it directs, informs, and limits. Got it.
Now, who are the key players making sure this whole system works and stays honest? The institutions.
It's a whole ecosystem of checks and balances. At the very top, you have Parliament. They hold the ultimate power. They can approve or reject the budget. That's the democratic check.
The power of the purse.
Exactly. Then, operationally, the National Treasury is central. They manage the government's accounts day to day and make sure the PFMA rules are followed.
And the person who actually presents the budget, that's the Minister of Finance. They prepare it and take it to Parliament each year. Then you have the South African Reserve Bank, the central bank. They manage the money supply, print notes, mint coins, and they actually collect all the state revenue initially.
And the watchdog, the one who checks the books.
That's the Auditor General. Hugely important. They independently audit all government accounts to make sure money was spent correctly, legally, and effectively. They report to Parliament.
So independent oversight.
Crucial. And finally, back within the departments, you have those accounting officers we mentioned. They're the ones translating the budget into actual services on the ground.
Right. So we know who manages the money. Let's circle back quickly to where it comes from. The income sources. We know taxes are primary.
They are definitely the biggest slice. But the state also gets revenue from state enterprises, profits from state-owned companies. There are also specific levies, things like fuel levies, and income from fines and bail forfeitures. And interest on dividends from investments. Plus, for big projects, they might take out loans. And there are various special funds and accounts set aside for specific purposes.
Okay, a diverse mix. Now here's something I find really practical. The different types of budgets. It's not just one big budget document each year, is it?
No. Governance needs flexibility. The main budget is the big annual plan, covering current spending, capital projects, transfers, but things happen mid-year.
Right, like unforeseen events.
Exactly. Say, a major natural disaster. You'd need a supplementary budget to allocate extra funds for relief efforts, something not planned in the main budget.
Okay, that makes sense for emergencies.
Then, sometimes an expense pops up related to the previous financial year that wasn't accounted for. You can't just ignore it. That needs an additional budget to sort out retrospectively.
Right, cleaning up past issues.
And then there's the appropriation budget. This one is quite interesting. It's used right at the start of the financial year to keep essential services running, paying salaries, urgent maintenance, before the main budget gets its final parliamentary stamp of approval.
So it bridges the gap to prevent a shutdown.
Precisely. It ensures government doesn't just stop on April 1st while waiting for formalities.
Okay, that brings us to the absolute core for anyone managing public money. The principles of financial control. These are the hard rules, aren't they?
These are non-negotiables. This links back to that idea of public funds needing strict stewardship. First, departments cannot spend more than they were allocated without getting specific authorization, usually from Parliament. No overspending allowed automatically.
Use it or lose it, basically.
Well, related to that is the second principle. Funds are only valid for that specific financial year. You generally can't carry savings over. It encourages timely implementation. Third, and absolutely critical, funds must be used for the exact purpose they were requested for. You ask for money for clinics, you spend it on clinics, not on new office furniture. That's misappropriation.
Very strict.
And fourth, remember that all collected money first goes into the state revenue account, technically under the control of the president initially.
A central pot.
Yes. And fifth, leading from that, no money can be withdrawn from that state revenue account without Parliament's specific approval. That's the ultimate control point.
Parliament holds the key to the vault.
In essence, yes. And finally, the principle that enables accountability. All accounts may be audited by the Auditor General. Everything is potentially subject to scrutiny.
Wow. Okay. That's a comprehensive framework. We've gone from the legal basis through the cycles and players right down to the strict rules of control. So pulling this all together, what's the big takeaway for our listeners, the students, the public servants?
I think the main thing is to see public finance not just as bean counting, but as the absolute core of democratic accountability and service delivery.
Hmm.
Understanding these rules, these institutions like Parliament and the Auditor General, the personal responsibility of accounting officers, it's fundamental to doing the job properly and ethically.
Absolutely. It's the system designed, hopefully, to make sure taxpayer money actually achieves public good. That budget isn't just numbers, it's described as both an instrument of control and a policy document. So, here's something to think about. Next time you hear a major government announcement, a big new policy goal, don't just listen to the promises. Try to find the relevant departmental budget. Look at the program budget lines. Is the money actually allocated? Is the policy reflected in the financial plan? Use that budget document as your tool for analysis. See if the plan matches the rhetoric. So, look, if you're curious about how governments make decisions or how public services work, or maybe you just want a clearer picture of what shapes your community, and if this sounds like your kind of thing, if you want to explore these topics more with us, well, hitting subscribe is probably a good idea.
Definitely. Yeah. Click that subscribe button. We've got plenty more planned.
And maybe give this video a like. It helps other people who are interested in this stuff find the channel.
Please do. It makes a difference.
Definitely. You can find us on social media. Just search for ConsultKano. Let us know what you think.
Yeah. Drop a comment below. But until then, do check out some of the other videos.
Lots to explore. Thanks again.
Kano Consultants for professional advice.
You can trust.